All right, so we are live and we don't have an early bird yet. Oh, there we have an early bird. Welcome, Nalini. Welcome, Suzanne. Delighted to see you here. We have several early birds. Welcome, Trupti. Welcome, Rocky. Oh my goodness. Welcome, Amanda. Oh my. A lot of early birds already. Delighted to see you here. We'll be starting. Oh, we have even more. Welcome, Patrick. Oh my goodness gracious. I'm not going to be able to keep up. Welcome, Matthew. Oh, Jesus. Welcome, Rita. Welcome, Lynn. Welcome, HK. Delighted to see all of you here. We have, my goodness gracious, more early birds than I can shake a stick at. I'm going to try to welcome as many people as I can just before we go live, and we're going to go live exactly sharp on the dot. We have an action-packed program, and we don't intend to make this overly long. We'd like to keep it short, and not only that, we like to keep as much time as possible for your questions and answers. So if you like, please go ahead at any time beginning right now. And if you have a burning question in your mind that you wish the panelists to handle, please put it in the chat box. The chat box is right at the bottom of your screen. It will show up. I have a second screen here, which is why I keep looking. Oh, there are some more people. Welcome, Glenna. Welcome, Jorge. So I'll try to keep welcoming as many as I can, but please forgive me if I mistakenly overlook your name. We have some more. Welcome, Hardam. Holy guacamole. Welcome, William. You know, we are probably going to test the limits of the size of our Zoom room today as the rate at which people are pouring in. Oh, I am running out of ability to welcome everyone. Welcome, Tahir. Oh my goodness, there's just too many. Welcome, Puneet. Delighted to see all of you here. We will be starting sharp on schedule in about 2.5 minutes, but don't wait for that. If you have a question that's burning in your mind and in your hearts, please go ahead and type it in. As MC, I will respectfully bring it to the attention of our panel once they have finished the prepared presentation, and we are going to keep the prepared presentation very, very, very tight and short in order to have as much time as possible for your questions. Oh my goodness, more and more people are coming in. I've never, ever had so much difficulty welcoming everyone, but I'm happy to do that. Welcome, Doris. Welcome, Mary. Let's see. Welcome, Nalini, in case I missed you before. Welcome, Rebecca. Welcome, Rohit. Welcome, Sarah. Okay, I think, oh, welcome, Eckhart. Okay, we have way more people than I had realized. I think we are going to test the limit of our Zoom room today. And we might run out of space. So please hang on to your seats that you have right now in the Zoom room, because once it exceeds the limit and then you try to log in, you won't be able to log in. Of course, we'll send you the recording, but that's not something. And by the way, as far as the recording is concerned, I want everyone to know that all the questions you may ask in the chat room, I'm going to make them anonymous. So you shouldn't have to fear that, you know, your question is going to be recorded for posterity against your name. At most, use an initial, at most, and most likely I won't even use that. Okay, so just go ahead and put your questions in the safe knowledge that they will be treated as anonymous questions. The idea is to learn. The idea is not here to try to create any record for posterity. Welcome, Ali. Let's see, we have many more people. I'm going to try to welcome as many as I can. Trying to go through the names here. I think that's about it that I can see. I'm obviously forgetting some folks here. Please forgive me if your name was not amongst those who I welcomed, but I'm doing the best I can. We're going to be starting in less than 30 seconds, and I'm definitely going to run out of my ability to welcome everyone. I'll be giving a short announcement as to how the structure of the event will proceed once we start, and that'll be in about 30 seconds. We have attorneys who are specifically knowledgeable about the new era in EB-5 that has commenced on July 1st and will extend not just until the reauthorization, but very likely beyond, because some of the changes that we are seeing today are going to be permanent. And yes, I have run out of ability to welcome people now. It's too many people pouring into the room. Okay, and we're coming up on the hour, so we're going to get started right now. Welcome all of you to our Structuring Direct EB-5 project webinar. This is, we've done a lot of events at ILW. We've done investor and agent events, over 350 in the last 9 years in over 15 countries across the world. And that doesn't count the 50+ events we did during COVID in over 20 countries using this wonderful new modern technology. So, but this one is not like that. This is one of the very rare times that we're going to do an industry event using Zoom. And the idea is only to do it when there is something burning and something which is really, really important and is not being covered adequately elsewhere. Then we'll jump in and do a very quick hit and run kind of situation, at least give people some of the highlights of what's going on. Now, this is a professional event. In other words, the people attending are either attorneys, immigration or otherwise, or project principals. But having said that, I do want to make sure everyone understands that our usual disclaimers apply. There's no legal advice being shared here. There is no financial advice being shared here. This is a purely educational event, so please bear that in mind. We have an enormous number of registrations, and it is possible that we may run out of our Zoom room space for the first time that I've ever had to say that. So if you have a spot in the Zoom room and if you should leave and we run out of space, then you won't be able to get in. So hang into the Zoom room, please. The sequence and structure of the event is very simple. We are going to have a brief introduction by me, which is I'm halfway through it already. And once I'm done, we're going to hear the two attorneys, our panelists speak on the substantive bullets that were already circulated, but I will be reading each one of them out one by one so that you know what question that they are going to be addressing. And then we are going to keep as much time as we can possibly keep for questions from the audience. So don't be shy at any moment, beginning right now. Go ahead on the chat box at the bottom of your screen and type in your questions or issues for your, and I will respectfully bring them to the panelists' attention at the appropriate time. I think that's it. And so now I'm going to begin with three very, very, very basic items, which were the three last bullet points. And I wanted to just rattle off certain issues. So I'm going to go from bottom to top. What are the misconceptions with respect to pool direct and individual direct? So please forgive me for those in the audience who feel this is a silly point, but I have heard it too many times for me not to say it. One, bear in mind that the 500,000 amount or the 1 million amount depends upon whether the project is in a TEA or not in a TEA. It has absolutely nothing to do with whether it's a direct project or a regional center project. Okay, I've heard attorneys, many of them with more than 20 years of experience say that, oh, direct projects have to be at $1 million. That is utterly not true. The second point is sometimes people say, well, a direct project has to be your own project. That is utterly not true. There are many people doing pool direct projects, which are other people's projects and not the project of the investor. The investor does not have to be involved as a matter of statute directly managing a direct project. So that's the last bullet. What are the misconceptions? Now, what is the perceived risk? This is also issue comes up again and again. People think that because the government has a role, the USCIS has a role in approving a regional center, therefore somehow a regional center project is by that very fact alone blessed by the government, which is certainly not true. Also bear in mind that in terms of risk in EB-5, government sponsorship or lack thereof is only one element. Asset classes matter. As we've seen, real estate is by no means a risk-free class. There are many different kinds of asset classes and they have their own risk profiles. And investment structures can create tremendous quantity of risk over and above, and it's just selection of an asset class. And we've seen also in many situations where even though the project itself might be a relatively safe, quote unquote, project of a real estate kind, but the investment structure put around it might itself make it extremely risky from some investors' point of view. So keep that in mind. So I'm just hitting these bullets very, very quickly because these are very basic points. And I felt it was not right to have our distinguished speakers handle these points. So I'm just rattling these off. The last point, how to prepare for possible future RC lapses. Bear in mind, this is not the last lapse. There might be lapses in the future. Congress is prone to not doing its job. Unfortunately, we've seen that that's true across the board. And what we are seeing happen across the industry is hybrid structures. So we kind of try to hedge, and you have a direct offering and a regional center offering within the same basic project. And there's a new thing called reverse hybrid. I won't go into it right now. We want to stick to getting the basics of the structuring done today. But if you should want more information on that, we will be providing that at a future date. So that's the three basic bullets. We're done with that. Now we come to the substance, and I'm delighted. Oh my goodness gracious, we have a packed room already. That's terrific. Welcome to all our latecomers. You have not missed any of the real events because that's what we're going to get from our speakers. But we have an advertisement, just 30-second advertisement break. My colleague Srikanth Rangnekar is going to be reading out a quick 30-second advertisement. Please go ahead, Srikanth.
If you're seeking direct EB-5 investors for your direct EB-5 projects right now, we can put you in front of prospective investors in the USA immediately. Our clients are getting wires from our events in just a few weeks after each event. We have events coming up in Minneapolis on October 22nd and in Detroit on October 24th. Please write to webmaster@ilw.com for a proposal for your review. Again, please email webmaster@ilw.com for a proposal for your project or for your client's project. Thank you.
Okay, so that was the quick 30-second break. And now we turn to this, the meat of our presentation. I'm posing it to both our panelists. If you will kindly unmute yourself now. And we're going to go through those 6 questions that were already announced, and I'm going to read them out one by one, and we'll hear your thoughts on the first, on each of them as we go along. First one, and by the way, don't, we have to, our distinguished panelists need no introduction, but perhaps they may want to say a minute or so about their, I will say this much. Matt Gordon has been doing mergers and acquisitions for a very, very long time, long before he heard the word EB-5. He's also, he keeps reminding me he's not the father of Pull Direct, but maybe I'll promote him to being the grandfather of Pull Direct. But in any case, he's certainly the person who was talking about Pull Direct when nobody even, they'd say, what, Pull Direct? How deep is that swimming pool? And he was doing it even then. So he's really, he's also the editor of the EB-5 book. So we are delighted to have him here. Mona Shah, to the best of my knowledge, has structured more direct EB-5 projects since July 1st than anyone else in the country. So in terms of having practical experience and seeing different structures and how they work with specific different business situations, she's probably seen more than any other attorney in the country. And as they say, there's no substitute for experience. So we're delighted to have someone with her level of experience. Of course, she's been in the industry forever, and her youthful looks belie that. But let's just let us let that pass. And with that brief introduction, let me jump into the substance of the questions. And again, I want to tell the audience, don't hesitate to please put your questions down at any time in the chat box. I'm going to keep track of it on the screen that I have right next to it here. And at the appropriate time, I will bring it to the attention of the panelists, including in the middle of the conversation, if that's appropriate. I will respectfully bring it to the panelists' attention on your behalf. So please don't hesitate to put your questions in there. All right, let's start with the first question. How does USCIS view partial investments differently in direct EB-5 as opposed to regional center EB-5? Either of you have any thoughts on that?
Sure. Shall I start, Matt, or would you like to?
Please, Mona, you take it.
Okay. Thank you, Sam. Thank you for this opportunity as well to speak to everybody. So let's start with why we can do partial investments. Partial investments, I mean, the word partial really is something that the industry really put together. The whole point is that within the regulations, you can be in the process of investing. Now, when these regulations were put out back in the time was before the regional center program. And I think it's important that our audience understand there are 3 types of projects, which you have already alluded to, Sam. You have your regional center projects, you have your direct pooled projects, which are similar in nature to the regional center, except for the job creation and structure. And then the third, which people often forget is different, are entrepreneurial petitions. And for anyone who does business plans in the audience, you will probably get quite a lot of people who want to do their own project. So what I think is important for people to remember is that when you are moving into a pool direct project or a regional center project, the developers have already laid down the groundwork. And if you are doing your own project, you have to do the groundwork yourself. So often is it the case that we're working with someone who may have taken a year or so to put their own project together, and they want to put maybe 500, maybe $1 million, maybe more, because in our experience, good, credible entrepreneurial projects don't happen in 500,000. And they won't put the full 500 straight away. So they'll put it out partially, and they'll show it partially by the time we're ready to file. So maybe when we file, they've only put in 250 or maybe 300, or maybe less, because all they've done is purchase a lease and some initial equipment. So that is really what the regs had in mind with in the process of investing. However, notwithstanding that, we're all using in the process of investing for pooled projects as well as regional center projects. Now, exactly the same concept runs for both. Here you have an investor who wants to put their money into a project where the developers have done all the groundwork. So what is your reason for being partially invested? A lot of the time you have to come up with a good reason. And I would say that USCIS look at it in the same way. They look at direct projects in exactly the same way as they look at regional center and pool direct in the same way. And that, yes, you have to show where your money is coming from, but at the same time, you need to show your commitment to the project. Now, if it's your entrepreneurial project, you don't need to because it's pretty obvious you're committed. But if it's a pooled or pooled direct, or regional center, you have to show commitment.
And Mona, let me jump in there. So one, just everybody should be clear. Your commitment must be for whatever this statutorily or regulatorily defined minimum investment amount is. So even if you try to avail yourself to file a petition prior to the full funding of currently the 500,000, you must have irrevocably committed to the 500,000. That means if you fail to fund the remainder, you're actually technically liable to the project. They can come after you for it. Now they probably won't, but just so you understand, investors have to be committed for the first 500,000. A couple of years ago, maybe 3-4 years ago, I recall being on a stakeholder meeting where the USCIS officer said that in the process of, they want to see that the investors irrevocably committed and a full source of funds on essentially what it is, the assets that will go into funding the full amount. And what we're really talking about is a delay due to creating liquidity against certain assets. So for example, someone might be in India, they're taking a mortgage against property to fund the EB-5 investment, and it's just taking them a little while. So maybe they had the first 150, 200,000 in liquid assets, that became funded, we filed a petition, then we will actually fulfill the entire source of funds based on that asset, the collateral, as if it's funded, and that's generally going to be okay. Mind you, if you do this, you are buying yourself, and Mona, you can correct me if you disagree, a guaranteed RFE, because they're going to want to know you did in fact finish the funding. I mean, like I said, correct me if I'm wrong. But
yeah. Well, I would say my advice would be interfile. And if USCIS actually read the interfiling, because unfortunately for the last 2 years, we have interfiled a bazillion times and USCIS have not looked at it. But that just may be COVID and the current situation. But if you have interfiled, we've had enough projects enough petitions which have been approved. The one thing though, I would really hesitate that if you're changing your source, you will get an RFE, because if you're changing your source, you're opening up the fact that USCIS will come back and say material change. So a material change is there when you have partial investments. So be careful.
Okay. Very good. Very good. Let's go to the next question. Thank you for your thoughts. We appreciate that. The next bullet point, as we announced, was what kind of projects are suitable for direct EB-5?
That's a good one, Sam.
All right. Why don't I take lead on this one? So, you know, what's great about EB-5 is literally the answer is everything that cash flows, everything that fulfills the job creation requirements. Remember, in this world of without a regional center program, and for direct in general, the business, the new commercial enterprise must create 10 new jobs, unless it's in a distressed category where you can use the saving of jobs. But so that is the burden. And I would challenge people, if you know, you're trying to do a project or advising someone on a project and they want to do the absolute minimum, it's awfully difficult to sometimes create 10 jobs just with 500,000. Even on directs that aren't even part of pool directs, you often have a larger capital stack where there's other equity, non-EB-5, other debt that goes along with it. So what kind of projects are, you generally will look at, you know, in the regional center, you always said there needed to be a lot of capital expenditure, so that way through the econometric formulas, you got a lot of job creation. In direct EB-5, you actually need a very high labor ratio to capital expenditure, because you're only going to have so much money to spend, and you've got to pump out a lot of jobs. So one example of a project that I'm working with right now is in the addiction treatment center space. So they buy these little residential houses in rural areas for next to nothing, and then they have lots of people running around them providing services to drug addicts. Wonderful, because it creates a lot of jobs per dollar spent. They don't get any real, quote, credit for the dollar spent because there's no econometrics. They just show a lot of jobs. On the flip side, I've seen people try to do hotels in the direct model, and they're spending 10 or $20 million, and they might only have 20 or 30 employees. So they're getting a very low amount of EB-5 that can go into that project. So there's no such thing as a bad project so long as they cash flow, so you can get paid back, or the investor can get paid back, and you have the job creation so that the immigration goals are fulfilled.
Yeah, I would agree with you, Matt. And I think that one thing I do really appreciate about Direct is the fact that you can have a project in almost any industry in any sector. Now, the two things I'd like to add to what you have said. One is that what often happens to us is that we get a pool of people. They might be friends, they might be relatives, maybe 4 or 5 people who club together and they want to come in and say they want to buy a motel. Now, if they were going, you would think that there's construction to be done on this motel, but when we are actually counting jobs, we can't use much of their capital in the job structure if we're using an economic model, because a lot of their money goes into purchasing the asset. So when you have a direct, you can use the money to purchase the asset as long as there's enough operational jobs. And another issue is a lot of lawyers just think, oh, just restaurants or just hairdressers, or they're just trying to think of industries where there are jobs. There is a caveat. The industry, yes, it should be an industry where there is a good job creation, but there's a number of industries where there's a lot of 1099 jobs. And the 1099 jobs, you have to be very careful. There is a slight different definition when it comes to the job creation. Maybe we can get that later, as opposed to your typical definition of a 1099. But for example, if somebody came to me and said, I want to open a Baskin Robbins, can I do that as a direct? I would say, well, no, because a Baskin Robbins one works very well. The finances work very well with 2 or 3 part-time employees. But if you want to open 3 Baskin Robbins over a place and you want to keep them for longer hours, then yes, because we're creating more jobs. But it has to be a natural job fit. Otherwise, your finances don't work. And remember, it's the job positions, not the jobs. I don't know how many times, and Matt, you must have seen the same thing. We get a client and he says, oh, 10 jobs, no problem. And then 2 years later, or 3 or 4 years later, when we're going back to them to try and get information for the 829, they are struggling with 5 jobs, 6 jobs. It's just not economically viable to get 10 jobs or however many they want. So if it's a natural job creator and that's worked into the finances from the beginning, that works a lot better.
Okay, that's wonderful. Thank you for your different perspectives. You happen to agree this time, but there'll be times that you may not agree, and that's fine too. The idea is to help our audience get some perspective on all these emerging issues. We're going to jump into the structuring part in a second, which is the structuring issues for Direct EB-5 in a second, but we're going to do a short poll with 3 questions. Technology, if you can have the poll launched, please. And it's all anonymous, so folks, you're not going to be able to see other people's answers, and we're all going to see the answers together right now. I or any of the speakers cannot participate, and the purpose is to understand what are people's current feelings about Direct EB-5. And there are 3 questions. They're all, you just got to select multiple choice, any one that you like. May I request folks in the audience, some people have already started finishing it. It's only take a few seconds, and we'll all see the consolidated answers, the total answers together. Right now, once you folks have, I'm going to give people a few seconds. Looks like about almost a quarter of the audience has already finished filling it out. I'm going to give people a little extra time, and we're going to see the answers together. For example, we're asking you, how long do you think? And by the way, I see people asking questions. Don't worry, we'll come to that. But let's finish the poll for the moment. We're trying to figure out what people think in terms of, let's exchange some ideas about where we think reauthorization is. And then, what do people think about all the new emerging structures that are coming up? So about half the audience has finished it. I guess I'll give people another 10 seconds or 5 seconds for those of you who are just maybe struggling with one of those 3 questions to figure out which button to press. I don't want to belabor this too long, and I'm not running an auction house. So how about those who want to finish it, if you don't mind, may I request you all to complete it in the next maybe 10 seconds. Okay, it looks like 60% of the audience has completed it. Is there any more who are finishing? Another 5 seconds. And then we'll see the answers together right now. I'm going to read it out right now, and we'll all learn about what everyone is thinking. And I think we are done with the poll. Can we please see the answers together, technology? It takes a second or 2. Technology, if we can, okay, that's the answers. All right. So it's about evenly spread in terms of people who are currently have a direct offering, and no, but intend to have a direct offering, and not planning to do a direct offering. It's approximately equal. When do you expect reauthorization to happen? Almost no one expects it in October or November. A solid third expects it in December. some in January, and it looks like I thought I was maybe in the minority, but it looks like I'm not. Close to half the audience believes that it's going to happen sometime between February and June. So that's something interesting to know. And in terms of these new structures that we are seeing to come, it looks like a small minority, 7% are already doing it. And 72% would like to know more. And we will send you more information on that. And there's just 21% are not interested in these offerings. So that's wonderful. Thank you, everyone, for filling out the poll. But let's go back now. And by the way, we do have a lot of questions coming in. Our panelists are answering some of those questions live. That's great. We like that. But I will be bringing some of those questions up because there's a general interest for everyone. And it will be anonymous. So don't worry. I'm not going to announce your name. So you can go ahead and put as many questions as you want. We've had at least half a dozen questions come in, and I appreciate that. And please keep those questions coming. I have them on my screen here, and I promise you I'll review them as soon as we finish the structuring points. And that'll only be 10 minutes or so from now. So let's begin with the first structuring issue. What is the role of the direct investor?
So, Matt, should I start?
Yeah, your turn.
Okay, so if it's a pooled investment, you don't really have much more of a role than you did if it was a regional center investment, which is a passive role. However, of course, on the forms, we never write passive investment. We always say policy formation. And supposedly you are involved in policy formation, meaning that you get a few emails from the project every now and again. If you are a direct investor, again, you could have a manager. You can actually, you don't have to be involved. You can have a passive investment even by being a direct investor.
Right. So the requirement, the Code of Federal Regulations requires that all investors be actively involved. Of course, when they wrote the regulations, you could drive a Mack truck through it sideways. So as Mona alluded to, there's several ways that people allow the active involvement to really effectively passive activity. And even for someone who's investing in their own project, nothing stops them from hiring, managers to do everything for them. So the answer is your job is to write the check and then hope it all works out, unless you want to be more involved. I mean, there's nothing that prevents you from actually being very active in all sorts of projects. I've even seen regional center projects that were sponsored by a single family, and it just worked better for them. So they rented the RC and went with it that way. So you can actually be truly involved in pool direct, regional center, or individual direct, or you could be passive in all three. That can be structured.
Just one quick caveat, Matt. For anyone who's on an H-1B, who's in the audience, you have to make sure that you don't breach your H-1B restrictions. So you do the required amount of hours.
Okay. Very good. Thank you for that reminder. Let's go to the next one. Can equity instruments be structured like debt for direct EB-5?
Sure, I'll take this. So, and from a corporate law perspective, we can make chickens quack like ducks and the vice versa. So most often in EB-5, you will find that, well, by the way, just full stop. All EB-5 investments start their lives as equity investments. Full stop. Whether you see the loan model in regional centers, what you're really doing is a two-step dance where you first make an equity investment in the new commercial enterprise, which then loans the money over to the job creating enterprise. So you will have often very debt-like qualities imbued into the equity investment. So it feels a lot like debt, but it is an equity investment. And it is somewhat arbitrary. It's up to the sponsors, and if it's a negotiated deal, to both the sponsors and the investors to determine the characteristics that they want in terms of upside participation, downside protection, governance rights, what have you. But all of it's pretty much a variable. So it can look like prototypical equity that you think of in common language. It can also look very similar to prototypical debt, but it will always be shrouded in an equity cloak.
Right, and I would just like to add that there's a lot of I won't say controversy, but we do talk a lot with developers about whether or not we allow it to be common or preferred, because there is a difference. I mean, one of the major differences with common is that you get paid towards the end after everybody else gets paid off, along usually with the developers, but your interest rate tends to be a little higher. So you have a little higher risk, as opposed to preferred equity, where usually you're the first to be paid or the second to be paid, depending on the project. But to answer your question, Sam, I think that, you know, the whole the way the structure has now changed towards regional center. We've seen many regional center projects use the same kind of structure, as in preferred equity, as opposed to a loan model, just because they have a little more control. They don't have to show it as debt on their books. So it's better for the lender also.
Okay, thank you for your perspectives on that. Let's move to the penultimate question before we turn to the questions from the audience. What are the issues arising in return of capital for direct EB-5 projects?
All right, so I'll start, Matt.
Yep, your turn.
Okay, so here, this is an area where I really feel like experience has counted a lot. When it comes to the return of capital in most regional center projects, we're talking about perhaps condominium developments, hotel developments. There's usually a trigger, such as refinance or sale. So for the vast majority of direct projects, we're looking at operating capital. So for operating capital, one has to be very smart when you're even structuring. And the return issues that we have seen is that a lot of times developers are a little more ambitious, and they think that they're going to produce a lot more money and that they can give a higher return, as well as perhaps their money at a return of capital at a certain stage. And then something happens halfway, just like all businesses, all startups have an issue at year 2 or year 3, one way or another. It's very rare that a project starts making money from the get-go. So what we have often seen in direct projects is that the return of capital is paid in installments as opposed to a large payout. The other good thing about direct projects, though, is that it's usually smaller. So it's not that you're paying tons and tons of people, and you're able to look at the finances in a way that would make it more palatable for the investor to be able to take their money back. I can add a lot more, Matt.
Yeah, sure. No, I'll pick up just, for general structure. So remember, in EB-5, return of capital is prohibited until the time of the 829 filing. So at this point, unless you're in an expedited project, it's going to be many years, and no capital of investment can be returned, profit along the way, of course. And so, and another thing from a structural standpoint, there's a lot of debates about some of the recent court cases on whether you can have a trigger event for the NCE to repay the investor. I think what Mona was speaking of before is a lot of times you'll have a trigger event where the JCE in a regional center context would then repay the NCE, and then you have the issue of redeployment, which I'm not going to get into on this answer. But when you have, barring, I've always advised people, you stay away from the guardrails when you're dealing with USCIS. So even if you might be allowed to do it and they don't like it, you don't want to buy yourself and your client a court case. So try to structure it the way that they'll pass off on it without a problem. And that means you cannot mandate the return of capital to an investor upon a given date or a given event. So that means it's sort of permissive from the sponsor, and that can create other issues as well of capital being trapped in projects. And so, oftentimes what we'll do is start increasing the amount of cash flow that needs to go to the investor after that repayment event is permissibly allowed. So what you can't force by contract because the law prevents it, you can incentivize by making it cost the sponsor more and more money. And with that, Sam, I'll just leave it there.
Well, just a couple more points, Sam. And Matt, I wasn't going to talk about redeployment, but it did really occur to me that a lot of people have been asking about redeployment indirect. So usually with an operating type of project where there's operational, there really isn't the room for having redeployment, because they can carry on for 5, 6, 7 years, however long your money is tied up. But we do have some projects where they are able to return capital. And I believe the redeployment rules may be a little different here, because we're not restricted by regional center rules that the new rules have come out with. But we have got projects, Matt, where they could be redeployed.
Yeah, no, there definitely is. It's a more limited context. I mean, right. And it actually just came up because this project we're working on, the addiction treatment, it is something that probably will be availed a national interest expedite. So the timetables get pushed up so far, where we're expecting our investors to get their 526 approvals inside of a year, and then they're going to be filing for their 829s in conceivably 3 years, which is a lot shorter than your normal EB-5 timetable. And in this case, this company might be a candidate for mergers and acquisitions. So that's where you get the redeployment is if they're able to actually sell the underlying project assets before the immigration is done, then they have to redeploy that capital. So it can come up. I think I would agree with that. It's more limited. I think the rules are the same. I don't think they've thought out all the rules. They probably have more rules that they've thought through for regional centers. They don't even yet really exist for direct, but the issues can be analogous, but it's, I think, a smaller subset of circumstances that it comes up in the direct side.
And one more factor, when you're preparing offering documents, the finances are much more important. Well, they're important always, but here I feel like the financials we have to do a lot more due diligence on. I often approve a third party sort of looking at the financials to verify whether the financials are correct, whether they match industry standards. If you can get a third party analysis on the financials themselves, that's really important, because remember, the financials really run the operations much more than they do in a regional center context.
Okay, we're going to the last question, and then we have a number of questions that have come in on the chat, and we're going to try to handle as many as we can, especially the ones of general interest. Please go ahead and type them in the chat box right now. We're going to turn to your questions immediately after this one. And in the interest of doing as many questions as possible, if I can request our speakers to keep their answers brief to this last question. How does the holding company structure help in direct EB-5 matters?
All right, I think it's my turn for this. So the holding company structures work very well because USCIS has acknowledged that while generally the NCE must be the employer of record for all the employees, it will allow you to count subsidiary employees if they are 100% owned subsidiaries. So that's a very important structuring issue. It's actually come up a whole bunch of times in one of the deals I'm working on right now, where we've had to, use phantom stock and tracking stock to get people who are selling assets in of subsidiaries and have it all work out. So you can account for it, but and the nice thing is, so from a pure corporate law standpoint, you really want to house different subsidiary activities in different legal structures to encapsulate liability, and then but you're not taking a burden of losing the job creation credit because USCIS will count it so long as they're wholly owned.
So here, I have a few differing opinions here, Matt. The holding company concept this is where the crossover with EB-5 really comes in. We have seen it many times, and we've seen Noids come in on a holding sort of company structure where the holding company and the actual NCE, there is a clash on the nexus of job creation. The company where the investors come in must have an actual undertaking of business. That's all laid out in matter of whole. And you will find that USCIS will come back and throw that at you many, many times. So if you have, for example, let me bring it to an example for it's easier to understand. If you have a company which is an existing company and they want to raise capital, they're going to put lots of jobs out and they want to raise capital. So they open up another company because they don't really want to give their equity away, nor do they want to open themselves up to USCIS for looking at their books and whatever if they brought the investors into their particular company. So in that context, holding company really does work. It does make sense for them. However, the new company has no business undertaking. The main business undertaking is carried out by the original company, and the new company is just brought in to put up the jobs. Here you will that's a disastrous
that's kind of going bottom up. I think you're right. It really needs to go top down. Like the classic example is you want to open up your ice cream stand example. I forget which franchise used, where you want to open up 3 or 4 outlets. You create a holding company. Each Baskin Robbins is in a separate subsidiary LLC, and the NCE is the holding company on top of all of them. That's completely permissible. What you're talking about, the order is out. For sure.
Right. And the second thing is that with a holding company, you have to also see who's actually creating the jobs and the idea of a wholly owned subsidiary. Now, USCIS kind of think a wholly owned subsidiary has a different definition to the corporate definition. So for corporate definition, you don't really have to have all of the members as there. But for USCIS purposes, they want to see a wholly owned subsidiary as the two entities being exactly the same ownership in order for the job creation to be attributed to this.
Yeah.
But So you get what I'm saying.
Yeah, no. We've always only done it where it's literally 100% of the ownership units
Yeah.
are
But-
held by the holding company.
But in many cases, it really is important to protect the assets. So if you have, for example, a hotel, you do want to keep the land separate, and keep the land separate, but don't let all the actual business happen from that entity. Have the business happen in a different entity.
Mhm.
Sure. Sure. As we have all learned, the USCIS dictionary is both separate from the regular dictionary and regular English dictionary, and kind of strange, some of the entries on the.
We're always arguing.
Sure. So now let's turn to the questions from the audience. Once again, folks, you can put in your questions in the chat box. I'm going to try to take as many. We got about over a half dozen now. I'm going to try to take as many as we can. And if your questions run out, we're going to stop the call. So we're not going to belabor this call overly. Hopefully what you've heard today has already given you some material to chew on. Remember, this is a professional call. It's intended for projects and their attorneys. This is not for investors, but let's go through some of the questions that have come up, which are of general interest. I'm going to only take some, and to all the others, if your question doesn't get chosen now, we will certainly pass them on, cut and paste them, and send them to the attorneys involved. And if they have some direction for you, they'll get in touch with you directly. And of course, we'll send to everybody listening contact information for both our speakers. All right, so we have a question. I'm going to try to summarize it. If an application, a direct investment petition is filed right now with a 500,000 investment, but it doesn't have a TA certification from the state, what could happen if the USCIS says that that's a problem? Any thoughts on that?
I'll just jump into this.
That's a problem. So by the way, if it's a TEA, if it's based on being a rural area, you don't need state certification. So just as a distinguishing characteristic. Otherwise, you should be able to get a state certification. The states are very motivated for it. I've often gotten TA letters in a day. There's a couple of areas that are a little harder, take longer, like Texas can be annoying. California has a large infrastructure, so it can take a couple of weeks. But you really do want to get that letter, and there should be no reason why you can't.
All right, and failing that, an economist would always help.
Yeah, I mean, but to leave it in USCIS, yeah, well, you could actually just go with the underlying data. But I mean, again, you never want to just confuse USCIS. They have the protocols using the state certification of the shape of the area, and to just do it yourself and rely on economic data, they might not know what to do with it. And then you don't want to get into a position where they deny it, and now we're outside of the period where it's 500,000 anymore. So just get the letter.
Oh,
Yeah.
by the way, my colleague reminds me we do have another 30-second advertisement, just a 30-second commercial break. Go ahead, Srikanth. This is the last one. This is the last one.
All right.
Go ahead.
So if you're seeking direct EB-5 investors for your direct EB-5 projects right now, we can put you in front of prospective investors in the USA immediately. Our clients are getting wires from our events in just a few weeks after each event. We have events coming up in Minneapolis on October 22nd and in Detroit on October 24th. Please write to webmaster@ilw.com for a proposal for your review. Again, please email webmaster@ilw.com for a proposal for either your project or projects of your clients. Thank you.
Wonderful. Thank you. And that's the last commercial break, I assure you. I think I'm going to presume this is from a attorney just getting started in EB-5. And so she has a question. She says, how far do you have to trace the source of funds? For example, it's a basic question, but if you can handle it in just 30 seconds. For example, if the father inherited this from an aunt and then gifted the amount to the son, and then son invested in the EB-5 project, do you have to trace it back to how the aunt received the amount? Any thoughts?
Yes. Pretty much.
Okay.
And just to color that, Sam, the further back you go in time, the softer the evidentiary standards. I mean, I'm sure Mona has more stories than I do, but I've literally had like photos, 100-year-old photos of the great-grandmother wearing the gold in India, which was eventually sold and provided capital, where the grandmother got from, you use affidavits and, and just family lore, because, there's only so much evidence you can get the further back in time. If you're within the last 7 to 10 years, you better have every last document. As you start going into decades and generations, there's, other strategies and tactics, because remember, it's only preponderance of evidence, which in theory is 51% you're telling the truth, 49% you're lying through your teeth. So, as you go back in time, it's a little more permissive.
Okay, thank you. And we have a kind of a rejoinder from somebody in the audience And by the way, I want to suggest that this fact pattern, this particular person is suggesting, I have heard from other players in the industry in the last few weeks, that some states dismantled their TEA mechanisms that they had in place. And that those states are currently unable to issue TEA letters. And this questioner suggests that Georgia is one of those states where right now there is no mechanism in place to issue a TEA letter. Any thoughts?
So yes, that's why I said, so we've had this issue and we've just reached out to our economists, and they've managed to obtain it. And they've basically put together a little packet very similar to what we were doing at the 900 stage. So if all else fails, contact the economist.
Yeah, and by the way, remember, you also go through the Legislative Affairs Office of the governor. The governors of each of the states are the ones that are empowered to authorize TEAs. Sometimes it can take time, but depending if the developer has, they're obviously spending money in a given state. If they have political connections, it's often not that difficult, but it really depends case by case.
Okay. Fair enough. Now, again, please, folks, go ahead and put your question in worst case scenario. If we can't handle it right now, if it's not of general interest, I will forward it within one business day to both the attorneys here, and they'll try to get back with you if they can, depending upon your question. Here is a question. It may need some research. So if there's no answer right now, then there is no answer, but I'm just going to throw it out anyway. This is an attorney. I happen to know this is an attorney. He has an EB-5 direct case, and he received an RFE regarding the clients to prove the source of funds for not for the client apparently, but for a private equity fund, which is invested $1.5 million plus in the project. And the private equity fund says that the SEC regs provide for confidentiality and will not give any information. DHS in 8 CFR 204.6G, 8 CFR 204.6G says that in the last sentence of that particular subsection says that all the funds have to be sourced in the NCE, not just from the investor. Apparently, if you take it at its plain language, and he wonders, any thoughts on that?
Yeah, I will give a shout out to the audience. I do believe Suzanne's in the audience, Sam. Suzanne has a wonderful piece on her blog just about this particular area. And we have utilized the same argument and are still arguing with USCIS that they've gone too far in asking what they're asking. It's a preponderance of evidence, and there's a certain standard which is expected, and they've just gone beyond that. But I do sort of congratulate Suzanne for that wonderful blog piece.
And go ahead, Matt.
Yeah, we've seen that as well, and it's a little bit shocking that they're kind of taking that tact, because it obviously the language is in the reg. Very interestingly, the reg might have actually exceeded its statutory authority. So if somebody feels like litigating it, they might have a good standing. But for structuring, it definitely gives you some thoughts about keeping the NCE very four-walled around where you can prove the funds, and then potentially moving other activities and spending to non-NCE entities, so that way you can protect against that issue.
Yeah, it's another argument for having a holding company.
All right, hopefully that was some help. I do want to mention, since you mentioned Suzanne, that yes, her blog has a lot of useful information. And if you want, Suzanne, I know you're in the audience, I can see you here. If you want to send in that particular link, or Mona, if you want to send it, we'll send it to everybody in the audience so that they can learn from it, because the idea of these questions is not just to help a particular questioner, but to hopefully help other people similarly situated. And we'd be happy to distribute that link to everybody on the call today. And we really do have a very large number of people on our call today. There's all kinds of other questions which we can't just jump into at this point. So we're going to, as I promised you, our calls will be extremely brief. We're going to wrap it up now. I'm going to give our panelists just a minute each to offer any final thoughts, and we'll be closing up shop within a minute. Matt, any final thoughts, sir?
No, I mean, this was great, Sam. I think we covered a lot of interesting points. As I mentioned in this project I'm working on, I had never actually worked on a project that had the ability to provide an expedite, especially with USCIS now saying, I think the minimum time on the website is 48 months up to 70 or some odd. It's quite a long time. So for people looking at projects that might be able to avail themselves of the expedite, it definitely is a significant advantage. And, if people have questions about how that works or what I'm working on with these other projects that seem to be getting it, you can reach out offline.
And the only thought I would
Last
like
thoughts to you. Yes, go ahead. Go ahead, Ramona.
is that I'm a great fan of direct pooled in some circumstances where you can keep on creating jobs because you are honed in a lot, hemmed in with regional centers. However, saying that, beware because USCIS is just, you have to be prepared to argue everything. And when you're preparing documents, for any direct pooled, you have to remember that you have to show so much more. It just seems that they don't have the same standard. They all understand how regional centers work, but they don't really understand a lot of the nuances of direct pooled.
Well,
So yeah.
You know what? You know what I'll say to that. I would agree with that, but in almost in a little bit of a different way because it's interesting. So when you're doing the business plan of a direct, pooled or otherwise, you really have to pay attention to every detail, and it has to be extremely thorough, all the legal arguments, and we've been doing that a long time. But then when it comes to actually the 829, you sort of do it, and then you really need to have all the job records. You need to make sure that the HR compliance is very focused on tracking by position. And if you do everything right, then at the end of the time of the 829, you hit print for the 4 or 5 different reports. It slots in by position, and it's very easy. Whereas regional centers, they really have to show how they spent the money and whatnot. So the regional center, the latter part on the 829 side was actually more laborious. So they're just different. I will say that a lot, especially in the days where it was 95%, 98% regional centers, they used to give the direct ones to kind of the newbies, and you'd get all of these just absolutely insane RFEs or noids, and we've always able to defeat them. And I will say almost a majority of the time, all we did was point out where the answers to all their questions were already in the materials that we had submitted the very first time.
I will actually add to that, Matt. You have to educate them on industries. So whenever we've done a direct pooled on a new industry, you really have to spend some time and educate them. And you have to educate them as to the job positions because they really don't understand. And you don't really expect them to. I think a lot of the business plans really, they might state the jobs without really explaining why, for example, 3 of a certain type of jobs are required as opposed to 1. And I think a lot more explanation is required. And I think that you need a lot more verification than you would at a regional center type of setup.
Yeah, I mean, and that's why people sometimes get surprised when they say, okay, I want a business plan for a direct or a pool direct, and you quote them a fairly large number because it's not like you can just go to a typical business plan writer. These EB-5, sometimes these plans, with all the supporting research and backup so they can see, and Mona mentioned, that the cost structure mirrors industry standards. We always try to bookend it is to show it's kind of fits within the 4 walls of the industry. It's reasonable, everything. This is the way it's supposed to flow. And sometimes these, we've had many hundreds of pages, even crossing 1,000 pages with all supporting materials of just the business plan side of some directs. And it seems crazy because we've had 2 investor projects with 1,000-page business plans, but that's what you need to get them through because it answers all the questions and it's paint by numbers. Where in the memos, then you could just go ... and show them, just lead them right along how it meets all the different standards in the law and in the Code of Federal Regulations.
And Sam, one more quick thought. Sorry, I know you said one, but often, and I've heard this from so many different lawyers, I'm astounded at times, that this is, if it's a direct pooled, it's still a securities offering. And you have to follow the same rules, the same offering rules, the same PPM, the Form D filings, just because it's a direct pool doesn't suddenly mean that all the securities rules go out of the window.
Well, one caveat to that, unless the person is taking an active management role, because then they fail the Howey test, and then they're not a securities offering. So it can be yes or, and that's the same with regional centers. Most of the time, they will come under this Howey's test and in fact be securities, but it needs one level more in terms of how it's run.
Okay, I'll just point out, Suzanne did just post the link, and I'm going to make sure it goes to everyone who is on the call today.
Thanks, Suzanne.
Thank you, Suzanne. I appreciate that. And 2 quick points I want to point out for the audience, and we'll wrap it up, is the EB-5 is not going anywhere, regardless of what Congress does or doesn't do, because the direct EB-5 is in the Organic Immigration and Nationality Act. And short of amending that act, Congress, which would be politically a Herculean task, EB-5 is going to remain as part of our immigration landscape for a long, long, long time. So regional centers are certainly on thin ice at the moment. We all hope that the reauthorization will occur and occur soon. but it's not guaranteed. As we all know, Congress is a sovereign body and will do what it pleases when it pleases. But EB-5 is not affected because direct EB-5 goes on, number one. Number two, I will say that the changes that this current era post July 1st have brought, the changes of this pool direct era, which is what we tried to shed some light on today, those changes, some of them will likely persist even if regional centers come back at some point, which we all hope they do. The idea of these hybrid or reverse hybrid structures will certainly persist, and the business models that we've gotten accustomed to, where it's all been loan based, many of the largest players in the industry simply made loans to giant developers. How sustainable that is in the direct context remains to be seen, and some of those business models may also change. In any case, just hopefully you got some ideas today to mull over and think about for your own projects and for your clients' projects. And with that, this is goodbye from ILW.com. Thank you.
Thank you very much, everyone.
Thank you.